Welcome to another live edition of Risk and Return. I'm Charlie Gasparino, here with my partner in crime, the granddaddy of data, Bob Sloan. This is our year-end review, where we're going to get into some of the great stuff, some of the amazing S3 calls of this year, some of our great guests, and some of my mediocre reporting, which I'll have some more of that today. Bob, before we get into all this, I mean, since this is the year end, we should just thank our listeners and our viewers, because they're growing. We saw, what started out as well. First, let's talk about how this started out. As always, great idea. Start with drinks, right?
We had talked to each other for some time.
Right.
You would call and say, "This is what I'm looking to confirm, and this is what I'm hearing," and say your data helps me form the story, and we would talk, and we never really met for a while.
No, we met through a mutual friend who remained nameless because he's believe it or not, he's an important guy.
So, he's a very important guy, and we want to, and you know who you are, and we want to thank you for doing that.
Yes, I want to thank him.
We thank you, and this mutual friend got us together, and we closed down the house till about 1 a.m.
Yep.
A lot of martinis. We had a good time. And then
the next
after that,
we paid for it, though.
We paid for it. And then,
although we did come together the next morning and start saying, "Hey, this week, this could work." And here's I'll bring the reporting chops. You'll bring the expert analysis of the markets. You've been in them. How long have you been doing markets?
Too long.
I mean, you had a long career on Wall Street, at Credit Suisse, correct?
Yeah. Although I tell you what I'm most proud of. I've been my own boss longer than I actually work for somebody else.
Yeah, but
that's a milestone for people.
You started this from zero.
From zero.
And now S3 is a fairly sizable organization. I go out to the trading to the room out there. It's there's real people, real data crunchers.
Yeah, just to be clear, it's not a trading floor. We don't trade.
It looks like a trading floor, though.
but it's set up in a bullpen fashion.
Yeah,
because we want open air. We want people to
interact with people. By the way, that's what made trading floors great. Before computers took over everything, people were talking to each other. They were explaining, they were sharing ideas, they were talking about markets. And I think that's what S3 does here. And I think that's kind of part of your secret sauce.
Yeah.
And we bounced around a bunch of ideas until we kind of settled on this format, which we're always adapting.
We're always trying something new.
Right.
We're not afraid to experiment. We've had guests on, and we said, you know what? People like the chemistry, the listeners, and the listener count, and the streaming count went up and up and up once it was just the two of us, and that was a learning. Was something learning.
We had some great guests, and we're going to show them off.
And we're going to show them off today. We've had some fantastic guests, lots of good friends, lots of contacts in the marketplace that came on and did us the favor of coming on and sharing their worldview. And one of the things I'm most proud of that we do together, and we'll show it empirically and irrefutably today.
Right.
The whole concept that evening when we first met face to face was, this is the data talking to the news.
Right.
And then what happened is that the data actually, I would say, gives you a really good inside view of what will be news.
Right. And we try to do is not tell you what to do. As a matter of fact, we don't do that.
We don't.
We provide you with information where you can figure out what to do.
Right.
It's kind of how I've always approached my reporting.
Yeah.
I mean, I do write columns. I mean, there's opinion. There's a place for opinion. But when it comes to markets, I think you don't want to delve. You want to go there. You want to go let the data drive the news.
That's right.
And I think that's what we do here.
Well, no, we totally do that. And there's a bid ask in everything. This is why data driving AI is so valuable, because there's a bid ask for everything in life, and literally every conversation is a bid ask. And our data gives you that discovery of what will be news, sometimes 48 hours later, sometimes 10 days later, sometimes 3 or 4 weeks later.
Right.
And you'll see a lot of the times, a lot of the stories that we do, whether, I remember we were doing the battleground stocks, and we still do that every day, that shows you all these AI stocks that were really in play, that had a lot of money on either side, that were very active. We went over and talked about Cracker Barrel before Cracker Barrel was a thing.
Right.
We did. And American Eagle before was a thing,
And it
because
was
the data was telling us that this was going to be a thing.
and it was right on the news too. It was like weird that the S3 data. I mean, it was serendipity, obviously, but
Yeah.
it kind of was right on the news. The news of the cultural aspects of those stories came, I think, a little bit after your data started cranking out stuff on Cracker Barrel.
Sometimes right after.
Yeah.
So,
or sometimes like immediately right after.
well, that's right.
Yeah.
So the data, and given Charlie's breadth in the marketplace and his contacts, and given the amount of users and firms that use our data, you put those two things together, you're talking to a lot of people.
Yeah, we are. And we want to thank the viewers and the listeners. Just get that out of the way, because without you,
effusively,
because you kind of make this happen, and you kind of you make this worthwhile. And we have a jam-packed show today, so I want to get to some of the meat and potatoes before we get into a sort of look back of the past year, which has been pretty remarkable. The breadth and the guests, and we're going to get into all that. But tell us about your actionable calls this week, Bob.
Sure.
Anything good? I'm sure it's great.
We have a couple. First of all, we've done, since the show started on April 22nd, that will be our 1-year anniversary.
God, it
seems like a month ago, right?
Yeah, right. Jesus.
Time
goes fast when you get old, Bob.
Well, but to your credit, Charlie, the consistency of doing this show every week without fail is, I think, one of the keys to why we're being successful.
Yeah, I mean, what we do here is we try to bring it every week.
Every week,
and we prepare for this.
Yes, we do.
I mean, this is. I mean, we have fun, but this is work.
Totally.
Let's get into some of your work.
So, April 22nd, we've made 90 calls. We've had a 57% hit rate on those calls
since April. Okay.
Since April,
right?
So 57% of the time we've been correct on these calls.
That's a good.
Those are
over 500 there,
easy. Which in the marketplace, if you're 51% is edge, 57% you're making money.
Yeah, right.
Really great money.
Right.
And last week though was a tough week for us. We had Costco as a bullish call, and it turned out that it was actually zero. So that was a wash.
That's a wash. That's not.
And then at Sienna, which is the networking firm, we had that bearish, and that was actually that was a wrong call. It was up about 9%. But still, overall, this year, if you look at all the calls we've made in aggregate, we've made 90 calls, 57% correct. So, this week we don't have any real calls. I think we have one bullish call on Nike. So we think we like Nike.
What's going on there?
There's a very strong signaling.
NKE.
Yeah, we NKE. There's just a very strong signal that comes out of the way we look at how the earnings are set up, how shortage is set up, and what momentum's happening in the stock. It's a very technical analysis, has nothing to do with the fundamentals of the company. It has nothing to do with their new sneaker or whatever it is. It's just the way the price action's setting up, and that's what that's our call for the week.
And a bearish call on DRI?
Yes.
What is that?
DRI is it's the same thing. It's just in reverse. We short interest sometimes will tell you it's a very strong indicator as to market. Yeah, Martin, Darden is a very strong predictor of market direction. And that's why we're making a bearish call. So all these things are technically driven. Not to confuse people out in the audience. These are entirely technically driven, data-driven calls. They are not looking at the cash flow of the company, the balance sheet of the company, the sales prospects of the company, the management change of the company. They're not
feel sorry for those people that have to do that.
Well, to me, the data is more fun, but there are a lot of people that love the bottoms up. So
Dan Lowe once said, "When was the last time you cracked open a balance sheet?" And he forced me to crack open a balance sheet, which I do enough, a lot.
And so that's those are our calls for the week. But maybe we want to go right into some of the some of the guests we've had on and some of the really amazing prescient calls they've made and some of the observations that are still holding true today?
Yeah, let's do that. Let's do that. We'll end the show with some of my reporting. How's that?
Well, let's do that.
Okay. So what do we got? Who do we got up first?
We had our first guest was Jack Devine,
Great guy.
the amazing ex-worldwide head of operations for the CIA.
Yeah, I mean, for a guy that
So humble.
He's a spy. He's like a really nice guy.
A really nice guy and very humble, but obviously when you have a job like that, incredibly brilliant. And he summarized the world situation for us in mid-May, where he really put his finger on Iran and Russia and what was happening in a way that was
before we show what he said, just remember one thing about CIA people. You know, people have the impression that we're running around like assassinating dictators. Yeah, I'm sure they do some of that, but there's also a huge data-driven aspect of the CIA because they get paid to know what's going on in the world, how it impacts the economy,
That's right.
and how it impacts even markets, and that's what Jack is good at. Let's hear what he has to say.
Sure. So, if Iran is cutting a deal, we can talk about the quality of that deal, and Syrian sanctions are lifted. Where does that leave Ukraine, and where does that leave Gaza? And what's at stake for President Trump? Is there a Nobel Prize in the offering if you settle all these things all at once? Is it possible?
Well, you left out India and Pakistan. No, my point is when you're looking at the world, I mean, he's moving so many pieces, right? But let me just hit a couple really key points for your audience. This is what they pay a lot of money for, Charlie. and that is, you're actually looking at a movement towards peace. Trump is really a peace-oriented person, not because of deep philosophical issues. That may exist. It's just not good business. If you want to look at Iraq and Iran, that was not good business. Okay.
All right.
So the Israelis, and I understand the Israelis' position, I've been very strong in supporting what they were doing against Hezbollah and Iran. Okay? But sometimes you run the cards far enough, right? Right now, they want to take out the nuclear sites, right? I get it. There's a unique moment. But I think the equation here is a deal may give us longer and protracted peace if you can get a good deal. The whole thing is about the deal. And I think we were talking earlier with Charlie, part of it will be, will there be validation and how much are they going to wind down the program? My independent look at it is the Iranians are so back on their heels. They need this deal. They can't afford to have Israel hit them again without firing back and destroying it. They will be humiliated beyond where they are.
That's exactly what happened.
That's pretty much what happened. We got a deal through military action. Essentially, Trump did drop the mother of all bombs on their nuclear site, and we haven't heard much from them since.
Well, what Jack was saying is that if they move 1 inch towards nuclear capability, it's all over for them.
Yeah,
and that was what preceded that clip, and that's why it was such a great clip.
And they've been defanged as a
and he knew that
global nuisance.
Yeah,
and that's pretty much where we are right now. Robert Konigsberg was fascinating because he obviously delved into another, not obviously, but he did delve into another obvious hotspot, which is Venezuela and China. 2 hotspots, particularly Venezuela right now. Right. We're on the verge possibly of a war with Venezuela right now.
Well, we have a blockade.
We have a blockade right now
at this point in time.
So let's hear what Robert had to say. I don't want to put words in his mouth, but we'll come back to it when he's finished.
Let's just start hot. Venezuela, ships off the coast. What's your take?
Well, so what's my take? It reminds me of Operation Just Cause in 1989 when Bush decided that it was time to take out Noriega. And there seems to be a lot of parallels in terms of the justification. So it's not about necessarily democracy, no democracy, what have you. Now it's about a lot of parallels, drugs, narco trafficking, what have you. So clearly the Venezuelans are spooked. They've mobilized 4.5 million of their sharpest, shall we call it, senior citizens for their task force or what have you. But in all seriousness, I mean, I think there's 2 things that may be going on. One, Trump may be deciding that it's time to create a legacy through the taking back of the Americas, and I do think we could be seeing the Trump corollary to the to the Monroe Doctrine, if you will. And it may be part of the whole deal with Putin, quite frankly, which is, you can have the Donbass, whatever it may be, and let's get the Chinese and the Russians out of the Americas.
Wow. Nailed it.
How good was that? That was August 22nd.
Nailed it. Totally nailed it. And, again, it seems like that's what's going on.
He absolutely had it diagnosed totally correctly.
And
then on top of that, he had an interesting take on Chinese real estate.
Let's hit it.
Let's hit it.
Yeah.
What are your thoughts about the Chinese property sector, because it is so influential, important to that country?
Sure, I think China property, first of all, it's a great example of what we were just talking about, which is indices doing damage to emerging market investors. And if you go back 3-4 years ago, if you are in an ETF or you're passive index, you have to own China property, and you own it at par, and you own it in a big weighting in an index. And the one thing that was clear about China property at par is that there was no property to collateralize that par bond. So now people are like, well, let's talk about investability. China's not investable. And I think the investability for us is one, you always have to talk about an entry price. So, I would argue, there's probably nothing at par that I would want to buy in China today.
Pretty good.
Pretty good. And then 3 months later, we looked at Vanke real estate, which was last week. That's been on the minds of a lot of investors in Hong Kong because it is a high-flying, high-profile real estate development firm in Shenzhen and Guangzhou. And they're having problems.
Yeah.
And they're missing payments, and they're building buildings like crazy. And people want to make sense of this $1 trillion surplus that China has and the amount of goods that they are exporting to the world. And even though I think people underestimate the demand within China, it just tells you that real estate is really what is driving the movement and trying to get people from the countryside to the cities, give them jobs so that they can keep it together. I think the great mystery for us is how unified or how splintered is China politically as a government and as a society.
And we don't know. And the other problem is, like, how do you judge? I mean, listen, obviously there's a real estate issue there, right?
There is.
We don't know how to measure it quite right.
Well,
right? There's no transparency, right?
That's there's no transparency, and that's why these real estate stocks. That's why we mention them on the show, right. And we do it quite frequently. Is Vanke. We talked about it last week, and we talked about the rising short interest and how the stock price is falling and how that continues to keep going. So one of the things that that Robert got and what Gramercy gets right is they had the world situation really sized up 3 months ago. And if you were watching in the middle of your summer vacation on August 22nd, you got a real pre-look into what's happening today.
And you could have done something with Chinese real estate stocks. Obviously.
Exactly.
By the way, speaking about Chinese real estate, the first guy I remember who's called attention to it was our buddy Jim Chanos.
He did
short sell.
He's been perma bear, no pun intended.
But he called that. He's often right, often early, which
Very
kind
early.
of screws some of his returns up. But he's like maybe one of the smartest guys I know when it comes to but he looks at balance sheets.
Well, I think probably as well as anybody that's ever lived, right?
Probably.
So
yeah.
That's a
him. I mean, there's like 5 of them. I would say him, Dan Loeb, the people like that are just like these great tech fundamental analysis.
Amazing analysis. And we had Jim on very early, and we were talking about MicroStrategy and the trade he put on.
He shorted MicroStrategy, right?
Yeah. Well, he actually bought Bitcoin and shorted the company. And
explain that trade.
So he was saying that the company was trading at a way higher value than the actual underlying. I don't want to call it commodity, but Bitcoin. And he said, what that can't happen. Eventually, the value of the company has to come down and you can't trade at a multiple to Bitcoin. And he's capturing. What he did was he went long Bitcoin. He shorted the company.
Now, did it work?
It worked spectacularly well
Is
because
he-
Bitcoin went from 125,000 to 85,000.
But now it okay.
And then MSTR stock went from, 200 and something to like 80. It was almost to the point
Oh,
where
tell me,
they had to sell. They had
So
to
he
actually sell.
shorted Bitcoin too, you're saying,
No, he did not. He went long Bitcoin.
but it went down.
Yes.
Now, how did that
But
help?
because the stock was trading at a many times multiple than Bitcoin,
Okay.
right? That's the stock valuation was
Okay,
a many
gotcha.
time to the asset.
Okay, gotcha.
And
Now
that
I
stock
understand.
went down quite a bit faster than actual Bitcoin fell. And he was able to capture that spread.
And that's pretty wild.
Yeah. And that's what we're going to want.
Let's hear what he had. Let's hear it in his words.
You know, what's so interesting to me, and my students ask this question, is that what I've been saying now for the last handful of years is not only are we in the golden age of fraud, but it's staring you right in the face in many ways that it didn't 25 years ago in the era of Enron. With Enron, you had to do some digging, right, to realize that there was stuff going on off the balance sheet. And a lot of things didn't make sense. Companies today are more and more brazen with how they present their financials. They basically simply will tell you that you should just not count a lot of these costs. And so I think that one of the ways the SEC has really fallen down is by allowing companies to aggressively use pro forma metrics to basically convert losses into profits. If Enron had that regime back then, they would have told you everything because nobody would have cared. And so you see companies with enormous amounts of share-based compensation or restructuring charges or whatever, and simply adding everything back to give you a number that isn't a real number. I remember GE a few years ago in one of their quarterly releases had something like 20 plus pages of adjustments to their earnings. I mean, it's every company almost. It's not just some high-tech companies or startups. It's basically the Fortune 500. Almost everybody now has some sort of adjustments to their profits that either may or may not make sense. And investors have gotten very used to, as I point out, putting multiples on expenses. And that's something you probably shouldn't do. You should put multiples on profits. And adding back large amounts of expenses to get a higher number and then getting a multiple on that really adds a layer of risk in this market that I think a lot of people don't realize.
Go to clip 6. So, he talked about the golden age of fraud, which is interesting. And that was a backdrop to the MicroStrategy trade, which we just talked about. What we thought was being instructive is to show how Jim thinks about the world, what he thinks about the current condition. Every Fortune 500 company, I won't put words in his mouth, but has massive adjustments to earnings and profits. And that's the norm. And he said, we've gone so far from the norm.
That used to be a big story when I was a kid at the Wall Street Journal. But someone adjusted earnings. What's going on here? It's like it could be fraud.
Right.
I mean, it's not fraud, but it's that type of a screw up is not good. It's not good
That's
management, balance sheet management.
No, that's right. And so we thought we'd give you a little highlight into Jim's thinking. But then further in that interview, he talked about MSTR and MicroStrategy and the trade he was doing. Let's go to that.
Let's move on to MicroStrategies. I have a lot of questions there. One, it would be great if you just explain to the folks on X, which is where we drop this show and our podcast. You're trading for a spread. You've put a trade on to capture a spread. The company is leveraging everything in its capital structure to go buy Bitcoin. And I'm not sure, when I read stuff about what you're doing versus what the company and Saylor, everybody says, well, they're selling stock and, they're buying Bitcoin. And that's just not, it's apples and oranges. And so the question we have is the company like Long-Term Capital is just so unbelievably levered on a spread and so dependent on financing that it goes away? Or is it something that the financing stays and keeps them in business, and you just kind of wait the game into the spread mean reverse?
So it's more the latter, Bob. They are not hyper levered because Saylor has done the smart thing. And I want to step back and for all the people that don't understand this trade, particularly all my good friends on social media, I am doing the exact same thing that MicroStrategy is doing. Basically, I am actually selling MicroStrategy stock, which is what they're doing, to buy the underlying asset, Bitcoin. And yes, they have a software business, and we valued it at between 500 million and $1 billion. But the fact of the matter is that this is a Bitcoin holding company. And in effect, right now, you are paying, if you buy MicroStrategy at $400, I think it's where it closed today, you are buying Bitcoin at basically 2x the NAV, meaning you're paying about $220,000 for Bitcoin, which trades at $110,000. And all we're saying is it's in MicroStrategy's interest to keep selling equity and equity-related stocks, to keep buying the underlying, because they do add value that way, and that's fine. But I'm going to do the same thing they're doing, and of course, Wall Street being Wall Street, although there's only a finite amount of Bitcoin, which is what I'm long, there are lots of copycats that have now cropped up to do the same exact strategy, thinking they're going to get rich by buying Bitcoin and having the market value it at 2x or 3x. Right. And of course, I always point out, like the Fed, Wall Street has a printing press. And if an idea gets too popular and too silly, Wall Street's going to create paper to fill the demand. And that's what it's doing right now.
So
we're doing the same thing
question.
Companies doing.
So you're saying that at some point, the investor class on MicroStrategy is going to get, smart to this trade and say, this is just nothing but dilution. And then
they're paying $2 plus for $1, and so the company is doing everything in its power to close that spread too. So there's a catalyst, which is great, and of course MicroStrategy has over a $100 billion valuation. So there's no borrower problems. So this is, I haven't seen an arbitrage like this in this size in years and years and years. And it's really due to retail investors who have convinced themselves that this leverage play on Bitcoin is the way to go. And I keep telling them, just borrow money yourself to buy Bitcoin if you want to be levered. You don't have to pay 2x for it in the marketplace. And that's it. It's nothing more than that. I don't have a view on Bitcoin. I don't know where it's going. I don't know what it's worth. But I do know that it's not worth 2x the last trade. And
right.
So
have you spoken to Saylor about your call?
No, no need to. Again, I agree with him. I'm doing what he's doing.
Yeah, and we've noticed the float go up, and they've done a lot of things in the cap stack to go out and buy Bitcoin.
Now, what they are doing, Bob, to your earlier question, however, is they were just basically selling equity via the at the market offerings. Lately, they've shifted to doing perpetual preferreds at relatively high coupons. Yep. So they're, I think they feel that maybe, by issuing all this equity, it's hurting the stock price relative to Bitcoin. On the other hand, they want to buy Bitcoin at a discount, so they're still going to keep doing this. So they're starting to lever up again, but it's still at relatively low amounts relative to the amount of equity they've.
By the way, isn't that what GameStop is doing now?
Yeah, they're doing it too. Yeah.
Oh, that was me. Let me ask you this. This is a stupid reporter question. I'm not a trader. You know this stuff. Why did he have to go long on Bitcoin? Why couldn't he just short?
Because the stock was trading at 2 times the value of Bitcoin. The implied value of the stock was twice the value of Bitcoin.
So the way the trade work, you have to buy the underlying asset.
That's right. And you shorted the top. You shorted the thing trading at a premium. And he captured all the premium because look at what happened to the stock price.
Okay.
You see it on the screen.
Interesting.
It worked out spectacularly.
So you couldn't just short the stock.
You could have. The safer way, the less risky way, was just to try to capture the premium.
Okay.
And that's exactly what he did, and it worked out spectacularly well. And he actually, I think, debuted that strategy with us that day.
Oh, yeah.
Which was on May 23rd. And then Bloomberg News picked up our podcast and
cited us.
Well, yes, cited us as that, which was very nice.
Yes,
our friends over at Bloomberg, for sure. And then, Charlie, you had a great point about the TikTok deal, and that was on June 10th. And we want to segue into Oracle and a couple of things Oracle that we've been talking about on this show.
What did I say?
TikTok ban, which we're going to get into later, is going to be delayed again because Trump wants to save TikTok. I mean, at least that's what we're hearing. He's leaning towards extending doing another executive order that extends its operation so we can essentially not ban TikTok, have a U.S. company buy it. It's all caught up in the U.S. China trade deliberations. TikTok is run by a Chinese company. Oracle, we should point out, will be the probably the main investor. It'll be the company that does the cloud. So, it's a little bit of an issue. If that deal ever gets done, that could be a push on Oracle stock.
It wasn't a push on Oracle stock though.
Yeah, at the time it was.
Oh, at the time it was. That's right. That's June, and in September. Now, here's the weird thing, because I've been following Oracle stock, not just because I follow Oracle stock, because it's all tech, because it's intrinsically linked to the Warner Brothers, the Paramount Skydance bid for Warner Brothers, because David Ellison, the son of Larry Ellison, the co-founder of Oracle, is doing that deal. And Larry is backstopping that deal, or at least their bid, their hostile bid, $30 a share, $78 billion, with Oracle stock that has been going down. Now, but it's interesting, between June 7th and I want to say September 12th, mid-September, Oracle stock went through the roof.
Yeah.
Do we have a chart? Yeah, look at that. Boom. Look at that. Boom. Boom. And if you notice, it hits its high, around September-ish, right? Am I reading that right? Yes. And then there he goes. Larry Ellison was worth $400 billion at that point.
Yep.
And then and then he's lost about, I want to say, 160 billion in net worth.
The stock's been off 15% in the last, whatever, 5 sessions.
There you go. And by the way, that's one of the reasons that that Warner Brothers is using to say no
to the higher price.
To the higher price his son is offering, and he's offering for Warner Brothers.
Right. And CDS has bounced around from 125 to 110. Now it's back up to 150. And as more concern about how to support AI, I personally think, we went over it last week on the show, the amount of times that the words AI bubble have been.
You're sick of it, aren't you?
Yeah, I'm kind of sick of it. I really am. I'm just kind of
like it is.
But by the way, I have a. This is I can't take credit for this thinking, but this is very interesting thinking.
Right.
And this goes back to the certainly the bear argument. Right. You're a New York City historian. You know as much about New York City as anybody I've ever met.
The fiscal side of it, at least.
Well, you know your stuff. And how long did it take to build the Empire State Building?
My grandfather worked on it.
Okay.
It was a construction wire lather. That was my father as well. I come from a family of that. I want to say 10 years.
1 year.
1 year. Okay. By the way, you know how much steel was in that damn thing?
Crazy amount of steel.
I mean,
1 year.
Now, my father worked on the Trade Center, which was more than 1 year. I know that for a fact.
For sure. Right.
And there was about like 1/8 of the steel, I would say even less, in the Trade Center as it was in the Empire State Building.
So, and then after 9/11, so by the way, Governor Al Smith at the time,
right,
he was running the project. This is then, I think, 1930.
It's in 30s, yeah.
Right. It took him 1 year. How long did it take to build back the Freedom Tower, right, the World Trade Center, after in the wake of 9/11?
Now, remember, that was tied up in a lot of politics. So
I understand, but there was a lot of permitting, a lot of politics.
That was like more than 5 years, I would think.
It was almost 10 years.
Yeah, by the way, I worked at the Wall Street Journal. I was down there when all that was going on.
And so I think the point is, if we're really serious about power and energy and something that is the symbol of capitalism, right, where there was every good motive in the world to actually go rebuild these buildings because they're so symbolic,
right,
it takes 10 years. And we need power for the grid, for AI. That's what is happening here.
Well, you know,
can't spend enough money.
Larry McDonald from Bear
He's
Traps
been all
Reports,
over that.
he's been all over it, and I want to give him credit for that. But he takes a more doom gloom thing. He really believes it's going to be existential and faster. I just don't see it. I just, I could be wrong, but
there's a real apocalyptic narrative with AI, and there are a lot of programmers being laid off, and there are a lot of younger programmers being laid off.
But he's apocalyptic on the energy side.
But there's just apocalyptic narratives
left
and right. So, we all use systems, and you have to say to yourself, whether it's Google or whether you use other systems that are in front of you, we use probably 1% or less of the total system's capability. So whether it's Google, whether it's some kind of desktop machine that you use for looking at financial markets, there's probably hundreds of thousands of pages or destinations within a box, of which we probably use on average maybe 5 or 10.
Oh, yeah.
Right.
Interesting.
So we've already done this experiment writ large with many folks, both professionals in financial services, and we've also done it at scale on retail through search engine. So why is AI any different? That you're going to use probably a thumbnail of its capability, and that's what you'll be satisfied with. So the early gains are spectacular. The productivity is spectacular. As a total job replacement thing, it means you have to master the box and use it at all its potential. And people don't use these things to all its potential.
I think it's going to start. There's going to be a lot of blue collar jobs created from AI, and I think it's going to help a lot of people do their jobs more efficiently, where there'll be more jobs in it. If you're in the information digesting business, that's what we do. We use AI to help us understand stuff. And, robots aren't that good at that. They spit out a number. They don't kind of interpret the number really.
I agree with that. So, I just, how we got talking about this is Oracle CDS and people being bearish on the debt of the company. If you think Oracle's not going to be able to repay its debt, that seems... It seems a very, 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 very that seems like almost outlandishly.
Follow Larry Ellison's career, and
come on.
Betting against him has been a real dumb move over the years.
They could easily refinance. They can easily raise the money if they needed to. The idea that somehow that this is terrible for
there's a market
company, they can replenish. But
the mood of the market,
well, that's the point. The mood of the market is just it certainly feels heavy, right? The markets feel heavy. We're a data company using an EQ thing saying it feels heavy, but it does feel heavy.
But this is what George Soros wrote about in his famous book, The Age of Turbulence, about this whole about reflexivity, and it's all about herd mentality, and always trying to figure out the herd. He's a brilliant investor. Forget about his politics. I can remember not too long ago where Tesla, people thought that was going out of business. Trust me, Elon was going nuts. Every day on Twitter, going crazy. Jim was short the stock, Jim Chanos.
Tesla, the company, was checking a website. So this is a kind of interesting fact.
By the way, you know how much that Elon Musk is worth now?
Well, if when SpaceX goes public, he's going to be worth a lot of money.
Over $600 billion.
Yeah.
If OpenAI goes public, he might be a trillionaire next year if market trends continue.
Right. So, one of the notable pieces of data this past week is just the performance of Nvidia and Google, which were two of the worst performers, right? Down 5 and 6 respectively, and underperforming the Mag 7 group. The Tesla was up 8%. To your point, the outlier, and the people started to increase their shorting of Nvidia, and it was the largest 1-week increase in short interest that we've seen in a long time. And
last week,
this up till today. And while they were covering and reducing their Google shorts, so that's just something there's different convictions, or there's different conviction behind, some of the correction that we've seen. And I think we have a chart that shows that. So
is there any like insight into when this is going to end, this AI stuff, AI correction?
I think that people have to see productivity, and they have to see the narrative prove out.
Mm-hmm.
The run-up was on what Greenspan, right, we figured out in the 90s, which was that the internet created such huge efficiency,
right,
that some of the inflationary expectations didn't hold.
And that was,
you could have the higher growth, right?
Yeah.
The Phillips curve and all these things didn't necessarily work. And that's exactly what needs to happen now. There needs to be some tangible proof other than the lack of job openings. And there are statistics that are very interesting that unemployed 25-year-olds, the unemployment rate, is going up marginally.
Right.
It's not like 3 to 6%, but it's 3.2 to 3.5. So you're getting, tenths of a percentage point increases.
Unemployment rate overall ticked up this week.
It ticked up this week too. So
4, 6, whatever it is.
I think you have to see some of the more meaningful productivity, efficiency things that might take 3 to 6 months.
Yeah.
Or
And
more.
and meanwhile, the president is coming out and trying to give everybody $2,000 checks, which will tell you that he's nervous about this economy, by the way, about the real economy as opposed to the AI and all and the Wall Street economy.
You know better than anybody that this is an election year coming up. You have the midterms, and the party in power will do what the party in power does.
Yep.
They will want to keep the party going, and they will do everything in their power to keep that party going. And from what we hear, the calendars are full. There's a lot of pent-up deal activity that was spiked because of the tariffs in April, and that those spirits will be in 26. We expect a lot of deals, a lot of activity.
Do you want to jump to Warner Brothers since it's in the news?
Let's do it.
All right, I'm going to pat myself on the back. Let's go to clip 14 on the Warner Brothers
clip
bit.
8. Clip 8, Terrell.
Oh, I thought it was battleground for.
No.
All right.
Let's start with you. This is everybody's talking about it. It's national
Warner
news.
Brothers
What's going on?
It's by the way, it could be a $70 billion deal. It's between 60 and 70, depending on how the bids are weighed and what's going on. And listen, I think it really is coming down to two bidders right now. Okay, take Comcast out for a lot of reasons. They're offering cash and stock. The other guys are offering much more cash and no stock. And I think the Netflix bid's a little funky because it's mostly cash, but we don't know exactly. Does that mean 51% or 81% or 91%? The Paramount Skydance, run by the Ellisons, David and Larry, who's backing his sons. David Ellison's the independent movie producer. Larry is the co-founder of Oracle, friend with Trump. They're offering a mostly cash bid. But I think the real issue here, and it's interesting because I really think that that David Zaslav, who runs WBD, the board, likes the Netflix offer for a lot of reasons. I think there's management synergies. I think they just like them. They don't. David Zaslav's never dealt with David Ellison. He's an independent producer. Ted Sarandos, who runs Netflix, Reed Hastings, they're staples of Hollywood, of course. And and this is at bottom a relationship business. And David Zaslav is is a Hollywood guy, relationship guy. My view is he's done a great job as CEO, but that's a whole other story. Right. And he's doubled the stock price, more than doubled the stock price. So when this thing is said and done, if he does sell it, but I think he's angling towards Netflix. But the problem is, the Trump administration does not want to approve the Netflix deal. And they're going to get the legal proctology exam from the DOJ antitrust of the century. I mean, literally, they're going to have to be willing to play 2.5 years of legal hardball. Whoa, not bad. It's kind of where we are right now. As you know, they took the Netflix bid. The plan B that you saw up there is in motion right now. Paramount Skydance launched a hostile bid. They're going to appeal to shareholders. I think we're in the 5th or 6th inning in this. It's still a bidding war between Netflix and Paramount Skydance. I mean, there's lots of fur flying. This is the fat cat fight of the century, I call it. It's like, so it's Zaslav, Sarandos versus both Ellisons, the guys at Redbird. Jerry Cardinal at Redbird is one of the best media bankers in the world, brilliant guy. I mean, they're really like, and Trump, it's interesting with Trump. I mean, yeah, he's friends with Larry Ellison, but he keeps throwing curveballs out there.
Right.
Oh, like Larry Ellison and David Ellison run Paramount Skydance that owns CBS, but he's mad that CBS still runs negative stuff about it. So he goes, "Oh, they're not my friends. They're screwing me over like the old guys." So it's all out there. The bottom line is that if you're talking to anybody who understands antitrust, they tell you that the Netflix deal literally layers the number one streamer, Netflix, with the number 3 streamer, HBO Max.
Right.
The other deal layers only 2 studios, and studios aren't a big thing anymore. It's not like it's not like antitrust on steroids like the other one seems to be. So, that's where we are right now. My guess, there's a good shot. Now, I heard it's not happening anytime soon. That's what they told me. Last night, I wrote a story that said that they're going to come back and have an answer to the Warner Brothers official, I guess, rejection of their bid, and they're not going to raise the bid. That did happen tonight. They did not raise the bid. They might cover the breakup fee, by the way. I think eventually they will, and then it's going to be a tough one for Mario Gabelli is there's no more bottom line. By the way, he's a guy that cracks open balance sheets, right?
Sure.
Mario's one of the smartest investors around. He owned longtime holder of Paramount and in Paramount Skydance. He likes the Ellison bid. He likes the cash aspect. He thinks it's more certain to get through. And you ever talk to Mario? We got to get him on the air. He's a tough guy.
He'd be good.
Yeah.
He would tell it like it is.
And he tells it like it is. And he actually told me, he goes, I like the certainty here.
Yeah.
The other thing, the Netflix deal is 27.75 cash stock. You get the rest of it, your money. You get it. It goes over $30 a share, so it theoretically beats the Paramount bid because you're going to get an equity stub when they spin off the cable properties. Netflix is not buying the cable properties; they're just buying the streaming service and the studio.
Yeah.
So it's a little more complicated, and then there's the regulatory aspect, and so that's kind of where we are right now. I mean, this could change by the minute we hang up here, and you'll see an increased bid by Paramount Skydance. But I heard they're not going to rush to do that. They think they still have a good offer, $30 a share, all cash. It's backed up by the Ellisons. It's funny that part of the contretemps here is Warner Brothers saying we don't trust that Larry Ellison's would stand behind this deal.
Yeah. So
do you trust Larry? Do you think that's positioning? I mean, his net worth has gone down a lot. I just said it, 160 billion in a couple months, but he's still worth 234 billion.
The presidential influence on this deal is quite heavy. He's made it known that he said it straight up about
I'm going to play a role here.
And one of the things that people have not really talked about is that on 60 Minutes a couple weeks ago, they did a interview with
Marjorie Taylor Greene.
Marjorie Taylor Greene, thank you.
The former MAGA stalwart, now what kind of apostate? He's been a critic of Trump. She had a huge falling out with Trump, which
and so
we don't have the time to get into here, but it's crazy.
But the imagery on the show is powerful. So during the financial crisis, what did they do? They interviewed Ben Bernanke. And they showed a printing press. Message to the world: we're going to print money.
Right.
Okay? 60 Minutes is very good at this. They get her on, they interview her. What's the last image you see? She's standing up in front of her hometown elected base, having basically turned apostate, she said, and she gets a standing ovation from her constituents, and they broadcast that. And so they're saying, the imagery is saying, if you stand up, you won't lose your base. It's very powerful. And so you can see
why Trump is pissed.
Well, you can see why.
And he was pissed at that.
I am sure. And so you can see why all of a sudden that piece would invite a president. If he had the opportunity to put things together, they will put their thumb on the scale to do that.
I could tell you what they were saying inside Ellison land, and I wrote about this, that 60 Minutes went kind of rogue. whether you believe it or not, and I don't know, they declined comment, but that Ellison had no knowledge that she was going to do that.
Right.
That Barry Weiss, who's at least the head of editorial, the person they brought in to,
Right.
The independent journalist who's right of center and runs the Free Press, that they did it they snuck it in behind her back. So when she found out about it, she couldn't really stop it.
Right.
It's still a little, it kind of rubs me the wrong way that she might stop that interview. I mean, that is a good interview, don't you think?
It's news.
Yeah. I mean,
That's news. That's news.
But it comes at the most inopportune time.
The imagery is very powerful.
Yeah. And Trump did not like it.
I can see why.
And he's still pissed. You could tell.
I can see why.
Well, to be determined. That's not going away, that story. So again, I think we're in, the stock was when I wrote that Paramount had internal discussions to increase its offer to as much as 33, which they have, not imminently, but the stock went up to 30. It's come down off of 30. So, what I've heard is that this is one of the biggest, maybe the biggest single arbitrage that's going on right now.
Has to be
on the street. And so, if it's at 28, listen, if you think if you think Paramount might pull this out, it's a $31 stock.
That's right.
Because they'll pay the breakup fee.
And you've been all over it. You've been all over it. And
so that's why this is an arbitrage play. It's trading at 28 right now.
Where do we want to go from here?
I think we want to wrap things up. Bob, it was an amazing year. Thank you for doing this.
Oh,
thank you for being my partner. I have to admit I do a lot of TV. I do a lot of talking. What I love about this podcast for me is that I could be a student and a reporter and suck your knowledge dry and get a front row seat to the amazing stuff that S3 provides. And it makes me a better reporter, and I think I've gotten smarter since April. How's that,
Charlie? What a ride.
Yeah, we're not done yet.
Oh no, we're just getting started. And there's a lot of experimentation that goes on between us. We talk a lot during the week about formatting, and you look at some of the earlier clips. We're figuring out all the lighting, and we're figuring out the camera angles, and we're figuring out the right mics and the right subject matter and the right pacing. But the one thing you cannot lie about on camera is chemistry.
Rapport. Absolutely.
And we have that.
Absolutely. I agree with 100%.
And so really, thank you for pushing me and getting me to stretch outside my own personal boundaries.
Well, we're going to stretch some more. When are we coming back? Do we know?
January the 7th.
All right. I'm looking forward to it.
Have a happy holiday. Merry Christmas.
Merry Christmas. Happy Hanukkah.
Happy Hanukkah. Happy New Year.
World peace, all the good stuff. Thank you for watching Risk and Return.